December stats just dropped, and our Oklahoma City real estate market is proving that it is one to watch. Last month, homes sold in just 30 days, which is much faster than most markets across the nation, for a median price of $257K, compared to the national median of $429K. One thing is abundantly clear. We are offering affordability and opportunity that is hard to beat. Inventory has tightened to 2.67 months, fueling a fast-paced environment where timing is everything. I mean, look, your dream home could be closer than you think, or you could be sitting on an absolute goldmine. Let's dive into the numbers and see why our Oklahoma City market is standing out nationwide. December closed out as a seller's market. We had 2.67 months of inventory, which was down almost 10% month over month, but we were up 10% year over year, which is showing some sort of progress towards a balanced market. We did have 100% list to sold price. Our median days on market, we were wrapping up at 30 with a median sold price of $256K, just shy of 257. What does all this mean? The seller's market means that there are not enough homes to meet the buyer demand, so the sellers do have the upper hand, right? For buyers, it means that competition remains fierce. Expect to act quickly and come prepared with strong offers. Now, sellers, it's a reminder that now is an excellent time to capitalize on high demand and low supply, but you've got to price accurately. So to give some context, back in November of 22, months of inventory was closer to 2.4. That slight increase year over year shows some recovery in inventory levels, but it's not enough yet to change the dynamics too drastically yet. Keyword. And so if we were at, say, 4 to 6 months of inventory, we would be in what's known as a balanced market, meaning if no new inventory came on, we would take 4 to 6 months, or whatever it is, in this case, 2.67 months to sell every home in our MLS. The numbers would be a little bit different if we looked at, our entire MLS or even Oklahoma City, as gerrymandered as the map is. So just keep that in mind. Every piece of data has got some points of arbitrage. So the median sold price was, again, just shy of 257K with a 1.25 point drop month over month, but we actually did see that start to climb. And while that may seem just like modest growth, it's actually a sign of stability in our market. Unlike some areas of the country that have fluctuated wildly, our market continues to show steady appreciation. So if we look back to pandemic era, so like in December of 2020, the median sold price was actually closer to about 235K, which indicates that sellers and homeowners have seen consistent improvement in equity, and that just makes our real estate market a solid investment. So the estimated median value was just over 240K. This is down 0.6% over last month, but up 1.3% year over year. This slight monthly decline is typically just your seasonal factors. As we approach the wintertime and the holidays, the market always cools off and then it ramps back up in the summertime. December tends to see less activity, which can put some downward pressure on values. However, the year-over-year increase does show that we have some market stability. And then if we look at some of the values here throughout let's just look at 3 years, right? So yellow line, again, is our national average. Our Oklahoma County is the blue line, and then Oklahoma State is underneath that on the orange line. Now, here we are. This would be December of 24. 240 compared to 371. The choice is clear. Our affordability, as well as everything else that we have in this fair state, is giving tons of people opportunities to live in an area that is not as costly as some of the other areas. All right, let's get down to new listings. Our median list price was $274,000. We were up 1.3% month over month. The number of properties, we were at 808, which does reflect a 15.7% decrease month over month. Obviously, the seasonality of all of this, it always peaks in the summer, dips in the winter. Median square feet are 163, so we're steady climbing on that, which I absolutely love. We're at 163 a foot. Total volume is down 16.6%. Again, the seasonality of it all. With the median living area square feet is also down, so some of the homes that are entering the market are a little smaller. Key takeaway, while the number of new listings is certainly down right now, the market is still seeing homes enter into it at slightly higher price points. So if you're a seller, it reinforces the importance of strategic pricing, because if your home is well priced, it's going to attract the buyers and it will sell. I mean, remember, we were at 100% list to sold price. So let's jump down to our active listings. In December, we closed with 2,255 properties in our markets, which was down almost 10 points month over month. This drop indicates that there are fewer options for buyers, which will keep the competition strong despite the seasonal slowdown. Our median list price was at 305, holding steady month over month. Get over here. There we go. So interestingly, the median days on market is up almost 14 points to 66. So this really just indicates that while there are buyers that are active in the markets, they're a little bit more deliberate with their choices. They may take a little bit longer to pull the trigger, whether that is due to the seasonal slowdown or interest rates or a number of different factors, but they are not out just willy-nilly writing offers and going bonkers. So it's something that sellers need to understand, that homes that are well-maintained in a good neighborhood that are priced well, they will sell. Look at the median living area size. So back 5 years ago, we were at about 2,260, where now we're down to 1,871. That obviously, the median does factor in the outliers and tries to get rid of those, but it basically means that the homes that are currently active are smaller than what we had seen in years past and have significantly been trending downward. While there are certainly great options for families looking to upsize, there's some amount of competition or challenge that buyers may face when they are looking to downsize. Or if buyers are seeking, smaller homes, then they may face some sort of competition. All right, now let's rock down to new pendings. So we had 659 pending listings, new pending listings, that is, last month, which is down almost 2 points month over month. Again, seasonality, bringing us to a median list of 250K. We are at a pretty steady climb, which is great for our market, indicating it is strong. Appreciation is lovely. Median days in market skyrocketed 20 points up to 35. And then the median square footage has dropped. Median area size has dropped slightly to 152. Now, what a lot of this means to me, and especially the median days, is buyers are more selective. We're not seeing people that are coming out and jumping into multiple offers and all of that stuff. So as sellers, just be very aware of that. And as you're pricing your property, act within reason. Base everything in fact. Do read the comps. Lean on your realtor. If you're selling FSBO, be very sure that you got the best data. And I mentioned earlier this pricing gap, 27K price gap between buyers and sellers. It's something that's, granted, it's a national figure, but I've seen it a lot where, the seller thinks that their home is worth much more than the buyer's willing to pay for it, and thus makes a stalemate. And, name of the game for either party is to transact and feel like they had gotten something as they leave the closing table. So whether you're on the buying or the selling side, just make sure that you're kind of aware of that. Maybe I'm too empathetic, but I think that it's something that will serve you well as you're looking through your real estate goals and whatever you're trying to do. All right, let's go over to pendings. So while those new pending listings were only properties that had went under contract in December, the pending listing card here is effectively everything that may have entered into December already under contract. So we did have 835 properties, which was down 11 points for a median price of 250K, very similar to the new pendings. Median days in markets is 27, also down 10 points for the seasonality of it all. With the median list price that had dropped 2.5%, this could show slight price adjustments, likely driven by some seasonal factors or with buyer caution. Now, these properties moved slightly slower than before, with a median 27 days on market, reflecting a 10% increase in days on market. This shift does highlight the importance of competitive pricing as well as move-in ready conditions for our sellers. Now, well-priced homes are still going to attract attention. They just might take a little longer to find the right buyer, as buyers are definitely taking some more time to evaluate their options. So let's talk on this a bit, right? Let's talk on all of this. So our seasonal adjustments are necessary. The holiday season often sees a slowdown with buyer urgency, obviously, with everything with the holidays, etc. And our market in December was no exception. We had pending sales and prices that had been down, so buyers were likely negotiating harder or just straight up waiting for the perfect deal. As far as the buyer hesitation, I think that the 10% longer days on market for pendings, that basically just suggests that buyers might be feeling the pinch of the rising mortgage rates or taking time to assess all their options. There's definitely some price sensitivity. So this 2.5 point dip in median price shows that the sellers that are responding to market conditions by adjusting their prices that are staying competitive, particularly important in a market where inventory remains tight, but buyers are going to be increasingly selective. 835 pending shows some solid activity, underscoring the demand that is still present for the right homes at the right price. If I could have any advice for sellers, if you're selling, the data shows that there's some power of being strategic with your price and also in your presentation. Move-in ready homes that hit the sweet spot on pricing are still turning heads even in a slightly slower market. Buyers, this 11% drop in pending listings means that there is a little less competition compared to November at least. So this could be a chance to secure a deal before the activity ramps up again in the coming months. Now let's go ahead and look at our sold listings. Let's shimmy down to our sold listings, shall we? December closed out with 720 properties that had closed. That is up 9.3% month over month for a median sale price of $256,745. Our list to sale price was over 100%, meaning some of these listings had offers and sold over list price. Magic, right? Median days on market climbed a whopping 36 points to 30 days. Median area is 155 feet. So let's talk about what all this means. Seasonal flexibility in pricing, yes, that is certainly a thing. With the median days climbing, I think a lot of that is reflected of just buyers that are taking their time. Buyers that are not going to be rushed into anything, and they're just taking a little bit long to finalize deals, which is fine, right? Total volume, we saw almost $250 million, which that is definitely demonstrating some overall market resilience and strength. So let's talk about some of these things. Speaking of market resilience, right? So December typically brings a slowdown, but this increase in sales, this is something that proves that our market, it definitely remains highly active and competitive even during the holidays. With the days on market increase, I think that it's clear that buyers are taking a bit more time just to consider their options. Maybe it's the rising mortgage rates or the busy holiday season, but something has been slowing their decision-making process. So their patience is growing, and so is the time. Despite all of those shifts, that 9.9% increase in total sales volume shows the strength of the market straight up. Buyers are still closing deals, sellers are capitalizing on high demand, and guess what? In the words of Ricky Carruth, closings happen every single day. My advice for sellers, just price your home strategically. I know I harp on it a lot, but that is going to be the best thing that you can do to sell your house. Even with a slight dip in the median prices, the rise in the total sales volume indicates that well-priced homes are still commanding attention and closing successfully. For buyers, I would say that this is definitely a slower pace than we've seen. It could give you some more breathing room to evaluate your options. Strong demand does drive sales volume up, but do be prepared because you got to act quick if you want to make sure that you're securing that deal. That is critical. Our market does continue to defy the national trends. We have strong activity. We have an insane affordability presence. So this median sale price of, call it $257K, I mean, that is significantly below the national average. So buyers, investors, you got some excellent value in this market. Wrapping up with our month's supply of inventory. This is always a great metric to look at because obviously this will show us how our market is. Is it balanced? Is it a buyer's market? Is it a seller's market? To revisit this, 2.67 months of inventory is certainly down 10% month over month. However, we are up almost 11% year over year. So if you look at our market today versus where we were, in 2020, we are just on par with, if not better than where we were pre-pandemic. Looking at just our little Oklahoma County data set, this is obviously just from that, but I looked at the stats for the whole MLS or for OKC as a whole, and we're actually in a stronger market than we were pre-pandemic. So that's something that a lot of people, I think, are forgetting to understand, that they might get caught up in the unicorn years of, I missed the 2% interest days. Well, yeah, you did. They're never coming back. But this is something that is not at all terrifying, right? This shouldn't be something that you are concerned with. Let's get some talking points on this, right? Our shift shows that our inventory tightened even further as the year closed. So that's likely driven down by steady buyer activity, blah, 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 blah. Now, compared to December of 23, inventory has increased 11 points. So that is slight progress towards balancing the market, but we're still far from the levels needed to create the equilibrium that we need to have a balanced market. So sellers, you still have the upper hand. So looking ahead, this low inventory, it certainly may carry over into early this year. So it could be a strong start for sellers who list their homes now. Buyers acting early in the year may help you avoid any increased competition in the spring. So I always encourage people to go out and look in the winter because you don't have that competition. Buyers, what can you do? Come prepared with a pre-approval. Go through the financing process first. Don't go shopping for homes without a pre-approval because A, I'm not going to take you, and B, it's walking out around without a loaded gun. You don't know what you can do. You don't know if you can do it. It's going to end in heartache, so don't do it. Have a clear understanding of your must-haves. Have your needs, your wants, have a buyer consultation, make sure that you have a very clear idea of what you are looking for. But in a low inventory market, speed and decisiveness are going to be your best tools to get what you need. For sellers, this is your time. This is your time. Low inventory means that you have a better chance to stand out and command the attention from these motivated buyers. So make sure that you're priced right, your home's in good shape, you're in a good neighborhood, or at least 2 out of 3. And if you got none of those, then call me and we'll sell your house to an investor or something. And that's a wrap. January market update in the books. Numbers are absolutely crystal clear. This is still a market for opportunity, whether you're looking for a smart investment, selling for top dollar, or just landing that forever home. And obviously, if you need any help with those 3 categories or anything else, click the link in the description below to get our team working for you, put together a plan that makes sense, aligns with your goals, yada, 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 yada. And if you want to see what neighborhoods outperform the rest in total sales in 2024, check out this video here.